Let's get started with your outlook, though, because the vaccine is about to be rolled out. We have better expectations when it comes to the economic recovery. At the same time, stimulus is still expected to be forthcoming, which should support gold. What's kind of on the balance of the things, your outlook for prices?
Gold's taking a breather, and I think that's quite a healthy thing after the rally it's had. It had a great year last year. It's having a little bit of a breather. I think that will result in a healthier gold industry going forward because the cheap and easy money that's been available maybe over the last 12 or 18 months will become a little less more difficult for smaller companies to raise. I think some of the discipline which the industry really has developed since the last fall in the gold price in 2013 and 14 was starting to drift away and ebb away. So I think this pullback may bring a new sense of that we're custodians of capital. We need to invest capital wisely, not on the basis that the gold price is going up, but on the basis that we can get a good return on capital for our shareholders. And in times of high gold prices, which we've had, and you can see the results that Evolution's delivered over the last 6 months, we're making super returns. And so I think it's healthy for the sector.
Is gold's inflation hedging role coming under threat by Bitcoin? We've just had the story about Bitcoin now hitting 50,000.
Yeah, I don't think so. I think the Bitcoin story is actually good for gold. Cryptocurrencies are shining a light on the fact that people are losing confidence in fiat currencies. Gold's been around for thousands of years. Bitcoin has been around for 12 years. There's hundreds of cryptocurrencies around. I still am backing gold to be that ultimate store of value. It can coexist with Bitcoin, but I think at this point in time, the exuberance and enthusiasm for Bitcoin is getting the attention away from gold and into the cryptocurrencies. But I think that will revert, and gold's store of value, inflation hedge is going to be there for decades to come.
So when you say that this is a breather for gold, how long do you expect this to last, given that we do have the macroeconomic conditions with more monetary easing as well supporting the market?
Well, I think what you're seeing is in general a positive sentiment. Markets are at record highs. The other commodities are trading at record highs. There's a sense that the worst is behind us and the COVID pandemic is behind us. But I think a lot of the structural issues which existed prior to the COVID pandemic outbreak are still there. The geopolitical tensions, exacerbated by the need for this massive fiscal and monetary stimulus, is going to result in fiat currencies coming under threat again, and people will come back to gold. So I think this is a short-term thing for gold.
Where do you stand on inflation expectations when you take into account what you're telling me about fiat currencies as well as Bitcoin and gold?
Well, you can't have this amount of money being printed and interest rates staying low for this long. And if they stay low for a lot longer, which seems to be the prevailing wisdom, you can't have that without inflation ultimately. And so inflation will come back. Interest rates will have to rise. And if inflation rises, I think people will go back to the traditional stores of value, and gold will have a role to play.
Jake, I know you're not into forecasting gold prices, but do you see a range for the next year? Where do you kind of see a rough floor, and what are some of the factors that you see playing into which end of the range prices might end up at?
Yeah, I'm a bit torn in this forecast because I think the retreat in the gold price is actually quite healthy from our business perspective, because it shines a torch on the fact that we're building a business at Evolution that is robust enough and resilient enough to withstand any gold price. We're making record margins. Over 50% of every ounce we produce, we're banking that in terms of EBITDA margins. Our all-in cash margin is over $800 an ounce. So in many ways, from a business perspective, from an Evolution perspective, selfishly, a retreat in the gold price over a more sustained period would be healthy for us, because both it would get investors to focus on the quality of our portfolio and would present business opportunities for us. That said, I see this as a short-term thing. I still see these fractures and tensions in the world right near the surface. And it wouldn't take a lot for markets to feel that they needed to go back to having some hedge against market volatility. So I'm optimistic that by the end of this year, this calendar year, gold will be back to its traditional role as store of value against an environment which is a bit more tepid or a bit more nervous about the outlook going into 2022.
When we spoke to Mike Henry yesterday, he spoke about the strong global fundamentals, the record dividend payout, really lifting these expectations that we're entering this new super cycle for commodities. Are you of the view that this is a new super cycle?
I'm not sure. I spent a lot of time building gold mines in remote parts of China in the 90s and early 2000s. I still see the geopolitical tension between the US and China as fundamental to a risk to that super cycle. The world has to keep spending money for that super cycle to continue. That requires the printing of money, because really it's going to be governments that are going to need to be spending that money. And I see that as being potentially good for commodities in the near to medium term, but ultimately that's going to lead to inflation, and that's going to be where gold comes back into play.
Jake, how about Evolution? Will Evolution Mining be spending money as well? What are your prospects for M&A? You do have a solid balance sheet, don't you?
So we've built a business around the fact that we want to be a globally relevant, we want to be the premier mid-tier gold company. We don't want to be a major. We want to have 6 to 8 assets. We never have the right 6 to 8 assets, so we're always looking to improve the quality of our portfolio. So in the last 5 years, we've acquired 4 assets. We've sold 3 assets. And if there's a bit of nervousness in the market, we'll be looking to acquire things again. We've been absent from the market for the last 15 months since we acquired Red Lake in late 2019. We felt that conditions were a little exuberant and frothy last year, so we stayed out of the market. This year, if there is a bit of nervousness, investors get, or smaller producers get more, have more difficulty in getting access to capital. That's where you start to get motivated sellers, you start to get stressed, and that's where Evolution is generally most active.